Afternoon, happy Friday. This is Sean LaBelle of the Decker Hewitt Group. Apologies for not being able to get the Market Watch Weekly out in its usual fashion last couple of weeks. However, we are back in the full swing of things, and so is the market, with all three major benchmarks hitting all-time highs this week. It's been very much of a march higher as opposed to a sprint. This rally has been very broad-based, and we have broken out of a 1 to 2 month sort of consolidation period. Leading the way has been all sectors here. It's been materials, financials, energy, and tech, as that U.S. 10-year Treasury has definitely receded from those higher levels that we saw in the spring. As for reference, it did drop from around 175 down to 142 this week. So with that, risk assets are definitely getting a lift. In terms of this week's Market Watch Weekly, it jumps into this conversation surrounding the taper tantrum and what exactly that phrase is. Just for some of you, we did witness the first taper tantrum in 2013. So this week's Market Watch Weekly is just a bit of a history lesson as to what exactly that was and why we don't think this current macro backdrop will see a similar playback of what we witnessed about 7-8 years ago. It's a very different climate, and we do not expect the same sort of volatility that we witnessed in the market. For one, we've just learned from prior lessons. So this week's Market Watch Weekly just gives you a bit of a history lesson as to the taper tantrum. Encourage you guys to have a read and enjoy the heat wave. Enjoy the weekend, and we will talk to you again next week. Have a good weekend.